Hello, this is Jordan, and this video is being recorded on the afternoon of Thursday, March 25th, 2021. Thank you so much for joining me today. Be sure to subscribe to the channel if you're watching this on YouTube. And in today's video, I'm going to talk about the dollar rally, the ongoing dollar rally, and the impact on gold and commodities. First, let's look at the commitment of traders report, or a slice of it, for the dollar. And this chart shows the dollar up top and the bottom. That is the inverse of the net spec position. It's the position of the commercial hedgers. And this chart is from sentimenttrader.com. It's a great site. It's highly affordable. I recommend that you subscribe. Now, as we can see, the dollar came down to significant support while the hedgers were heavily long. So the inverse of that means that the speculators were heavily short. So there was a setup for a rally, and also the fact that we should recall gold was already correcting before the dollar rallied. So all those things were signs that a rally in the dollar was probable. Now it looks to be confirmed. It looks to be gaining traction. And so one thing we want to look at is the not the net spec position here, but the position of the commercial hedgers as is shown in this chart. And I think they were net long a couple months ago, about 15,000 contracts. Now the hedgers are currently short 9,000 contracts. I drew a line there, as you can see, between minus 20 and minus 40K. I would like to see that come down to minus 30 or so. That would indicate that the position of the COT would be more favorable to the dollar starting to decline again. So there's still more room here for the specs who are heavily short. There's still more room for them to close out those shorts. And of course, that's helping to push the dollar higher. So we have to keep an eye on this as far as we gauge how far this counter trend rally might go. Now, this is the weekly bar chart for the dollar. And again, we can see the dollar came down. It was oversold. The sentiment was really setting up for there to be a rally. It came down, made a bit of a double bottom there around major support at 88. Now it's rallying. It's gained some traction. I don't think this chart has updated the data today, so the dollar could be trading around 93 now, the dollar index. As you can see, there is a band of long-term moving averages, and those are all around the 95 to 96 area. So I've sketched out here a possible scenario where the dollar could continue to rally, then it potentially starts to roll over end of the year, early next year. Ultimately, what I think is the next leg down in the dollar, when it rolls over and eventually declines towards 88 and breaks below it, I think that is going to be the real significant move down that really triggers a huge move in precious metals and also commodities. But again, that's not imminent. The dollar's rallying right now, and that the dollar, that position, that status of the dollar, it looks like it's going to be intact for most of this year. And here I have, looking at charts of various things. We have gold at the top, then we have copper, then we have the rare earths ETF, REMX, then we have the silver stocks ETF, which is SIL, and then we have the uranium stocks ETF, which is URA. And what we can see is that these markets have all hit major resistance, and they're essentially going to be correcting while the dollar has this rally. And they're all correcting after hitting major resistance. And we can see that gold is leading. Gold, it was the first to peak. I mean, it's already 8 months into its correction, while copper, I think, peaked last month. And I mean, it's starting to correct. The rare earths ETF, we can see that it's putting in a bearish candle this month for the first time. Silver stocks have been going sideways along with gold, but they've held up better given the inflation narrative. Uranium stocks, if they've held up the best, they haven't really started to correct yet. It's difficult to see there at the bottom, but they are trading around resistance dating back to 2015. They're a little bit above it now, but we'll see how they trade, how they close this month, how they perform the next month. But essentially, these markets are going to continue to correct because the dollar rebound has gained traction. And recall what I said in the last slide. After the dollar completes this rally and it starts to roll over again, I mean, that could be the catalyst for eventually all these markets breaking above that long-term resistance. And we know that gold leads the dollar. I mean, gold even went up with the dollar going up in 2019. And as I said, gold is already 8 months into its correction. So the dollar rebound gaining traction, it's more negative for the rest of these commodities, which have only just started to correct. But eventually, if I'm correct in my thinking that the dollar this rally will eventually roll over, maybe early next year, middle of next year, whenever. When it rolls over and heads back down towards that 88 level, breaks that long-term support, that's probably going to coincide with capital moving back into commodities. And you can see all these markets here breaking these multi-year resistance levels. So that's the big takeaway. And also that gold, it's the leader. It leads, and it's had its correction already. It's had most of its correction, and so these other commodity markets could be following that path. So that's all for today in this video. Hope you enjoyed it. Let me know. Leave a comment. Let me know what you think. You can go to my website, TheDailyGold.com. Check out all the free info I give there, and also consider my premium service. Thank you so much, and I look forward to publishing another video for you guys in the days and weeks ahead. Thank you.